Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in, and overall, the housing market is in complete shambles, something that may have been avoidable had the Federal Reserve taken action in 2021. But alas, they have not. And now they're stuck with the job of having to crash our housing market. But the question is just how much will our housing market crash? Just how much will the interest rates go up? And how much tightening will continue? And you guys, that's what we're going to look at today. We're going to dig into an article. I'm going to pull up some Fed economic data charts. And I'm also going to show you, according to the Federal Reserve, how much mortgage-backed securities that they're supposed to be selling. And then I'm going to pull up a chart of mortgage-backed securities to show you how much they have not been selling. So that's today's video, you guys. And the name of the article from Zillow that we're going to jump into is titled "Mortgage Rates Stay Flat as Inflation Persists." And you guys remember, please, I'm not your financial advisor, even if I want to be, even though my bio is as a realtor, loan officer, and instructor in real estate in all things Texas, and someone that wants you to win in the housing market. And for that bio, you guys, please like this video, subscribe if you haven't, and do me a favor, comment below. But regardless, you guys, let's get started on this video right now. And y'all, this is super brief. I'm only going to read this one paragraph right here, and then we're going to start looking at the data and kind of just figuring out answers to those questions. How high will rates go? How much tightening will need to be done? But here's how the article goes. Mortgage rates were fairly flat last week. All right, let me try this again. Mortgage rates were fairly flat last week. While interest rates continue to be volatile as markets adjust expectations for Fed rate hikes, mortgage rates ended the week basically unchanged at about 6% for a 30-year fixed rate loan. Economic data and comments from the Fed officials last week point to the Federal Reserve continuing to rise the federal funds rate until inflation is under control. The Consumer Price Index released yesterday showed more persistent inflation than expected. As a result, investors are now fully pricing in a 75 basis point hike in the federal funds rate at the next FOMC meeting, driving up interest rates. Retail sales and jobless claims data will be released later this week, but the market's focus is on next week's rate decision from the FOMC. So do you guys see what I'm saying with how Zillow is now kind of just reporting news on the housing market instead of forecasting about the housing market, which is really important because remember, at the beginning of the year, Zillow said that year over year, home values would go up over 19%. Okay, so Zillow said year over year over 19%. Now, according to Redfin, we're actually under now as overall nation, we're under 6% year over year. And you guys, that's why I keep telling you it is so important to look at all the data sources, also use logic, also monitor your local housing market, because quite frankly, the data varies so significantly. Now what I want to do is pull up a Redfin chart that tells you guys the median sales price for houses this year in 2022, because I want to show you guys where we were at as far as the peak and where we are at right now. Now, I bring this up, guys, because I want to show you the power of the interest rates. Now, you can see here that essentially most metro areas peaked in June. Okay, so most, not all, but most metro areas peaked around here. And as you can see, median sales price is already going down. And you can see up here, it says it's at 6.2%. It's lower since then, but it's not the 19% that Zillow keeps saying. But again, you guys, it peaked here in June, towards the end of June. Now, let me ask you this question. Do you guys remember what else peaked in June? Okay, so obviously, June is when the transition started, right? Essentially, June is when the red hot housing market kind of hit a brick wall. So what happened in June? Take a look at this. All right, guys. So here's the Fed 30-year fixed rate average mortgage in the United States. And what you can see here is what happened in June is the interest rates actually peaked in June to 5.81%. Now it's higher since then, but they did peak in June. And that's why I think that we see so many metro areas that actually peaked in value and in price in June. So, what that tells me is, if we're going to continue this trajectory, we absolutely need interest rates in the 6%, right? But I find it very interesting. And you guys can see yourself, here's the run up on interest rates. Here's where it's peaked. And here's where almost all metro areas are essentially starting a crash or starting a reset or price correction or negative equity growth or whatever it is that you want to call it. But regardless, you guys, the interest rates are definitely impacting our housing market. So now I want to pull up an article from Black Knight just to show you how big an impact these declines in prices have actually been. And I know I've referenced this before, guys, so I'm just going to read the first bullet point. This is from Black Knight, and here's how it reads. Annual home price growth shifted from deceleration to decline in July as the median home price fell 0.77% from June, the largest single month decline since January 2011. So again, you guys, this is happening right now, despite what people think. Now, I've heard, several realtors on YouTube basically say that people like me that are saying this don't know what they're talking about. This is just seasonal. We should expect this. But the reality is, you guys, anytime the Federal Reserve prints trillions of dollars, offers essentially free down payments, free stimulus, lowers interest rates to 2%, that's not seasonal. That's historical. But it is what it is, you guys. Now what I want to do is let's jump into the next chart right now. And this chart, you guys, is inventory. And what I want to show you is this. So essentially inventory from July to August didn't go up that much. And I believe it didn't go up that much because as you saw, the interest rates peaked in June and then went down in July. So I think that it brought a lot more demand back into the market. And all of the fear of missing out that was still on the buyer side kind of got shaken out in the month of July, in my opinion. But here's the thing, you guys, we're about to go in historic months, and you can see kind of start here. It starts around October or September. We're going in historic months where actually inventory goes down. And what I believe is going to happen, because we're going to start entering months where inventory actually goes down, you guys can see that here in 2018, 2019, 2020, obviously. But usually what I think is going to happen is as a result of the inventory going down, you guys, I think that is going to give a bigger green light to the Federal Reserve to actually tighten even faster and even stronger because they can't have inventory go down. So depending on if it plateaus or if inventory actually goes down, I believe that is going to signal to the Federal Reserve additional tightening and additional rate hikes. But there's another thing that is going to be a factor with interest rates, and that is mortgage-backed securities. So take a look at this chart right now just to see the holdings of the Federal Reserve and mortgage-backed securities. Take a look. Okay, guys, now this is super duper frightening. So this is the 1 year outlook. This is the Fed economic data. Again, mortgage-backed securities held. And you can see here that the Federal Reserve really has not started selling mortgage-backed securities. So I believe that once that starts to happen, obviously the interest rates are going to go up even more, but we really haven't seen an effect on interest rates and mortgage-backed securities, except when the Federal Reserve started buying them. Obviously, that kept the interest rates low. So, here's the thing, guys. They haven't even started selling mortgage-backed securities. So once that starts happening, I also think we're going to have an additional surge in interest rates. But what I want to do is I want to show you how much mortgage-backed securities they are supposed to start selling this month. Take a look. Now, you guys, this is from the Board of Governors of the Federal Reserve System. And really what I just want to point out is the fact that their plan, and you guys, this will be referenced, their plan is to increase the sale of mortgage-backed securities to $35 billion per month starting in September. So they're supposed to increase it to $35 billion per month. But the issue, guys, is I don't even see them selling the $17 billion that they were supposed to start selling. So this is going to be really, really wild. I suspect what's going to happen is they will start selling mortgage-backed securities, but I don't think they're going to come close to selling $35 billion worth. In fact, I expect the Federal Reserve to come out and essentially change their asset selling program to be more realistic, because I believe if they stick to what they've said they were going to do, that there is no doubt that their housing market will go up in flames. I have no doubt of that. But regardless, you guys, it's really important to understand that the rates are going up. More than likely, quantitative tightening will continue. And I can see interest rates this year getting into the high 7%. Possibly for some people on conventional with a minimum down payment, 620 FICO score, no compensating factors, possibly even an 8% this year. You guys, and they have to do that because they were late in 2021. And right now we have a runaway high, 40-year high inflation, and something needs to be done about it. And those are just the facts. So the question is what do you now do with the information you just got? Now, the first thing I want you guys to do is this. Don't buy a house right now. Let the dust settle and let the prices continue to drop. And what I want you to do, you guys, right now is monitor your local housing market like crazy so that you know what not a good deal is, but what a great deal is. And if you don't monitor and track your local housing market, use Redfin, use Zillow, use so many different programs. If you're not doing that, you guys, you're going to have to trust a realtor or even a stranger to tell you what a good deal is. And you don't want that because not all, but many realtors are biased because that's how they make their money, by selling you a house. So still use a realtor, use a great realtor. But what I'm saying, equip yourself, understand what's going on in your local market so that you can make an informed, educated decision and you guys can win. But other than that, you guys, I really appreciate you watching this video, and I hope you guys got value from it. If you're out there investing in real estate, you know I wish you luck, and I hope you win.